first, we're going to have a look at the stock of the day, which is Viva Energy. Now, Viva is a leading energy company that supplies about a quarter of Australia's fuel requirements. Coles has entered into a binding agreement to sell its fuel and convenience retailing business to Viva. Now, this transaction will see Viva Energy own and operate the 710 Coles Express sites currently operated by Coles. Coles will receive sale proceeds of $300 million and will assign the leases relating to the Coles Express sites to Viva Energy. Coles expects to record a small gain on the sale of the business. It's expected to be completed in the second half of FY23. Let's take a look at how its shares are performing today. And they're up 5% to $2.77. Let's go first to you, David. What are your thoughts on Viva Energy?
Yeah, it's certainly an interesting transaction that it really takes a lot of the risk and puts it on Viva Energy, whereas previously Coles had the risk of those operations. One of the interesting parts about the structure that Waypoint runs the land, and Viva Energy runs the energy side of it, and Coles used to run the retail. So it brings it closer together. It means that Viva has greater control over those sites. But the interesting thing is that if there are any issues with those sites, well, the risk is now Viva's, whereas previously it was Coles. Shares have reacted fairly well to the announcement today. We've got a buy on Viva Energy. We think it's a good business. They've benefited very strongly from the increase in the fuel price over the last 12 months. So their last result was double. So obviously getting very good margins on fuel now, and it's probably timely with the fuel excise coming off at the end of September. So we'll still see fairly strong margins as far as energy is concerned, and now they're becoming more of a retailer as well. So interesting transaction. We think that long term it does make sense for the business, and we think that Viva is a buy.
Andrew, David thinks Viva is a buy. Do you agree?
Well, I wouldn't be silly enough to disagree with David. Wouldn't get us off. No, look, I agree. I think David sort of covered the high points. Certainly, the risk being transferred away from Coles to Viva. Coles making a couple of dollars on the transaction as well, so it's a good outcome there. I was just looking at the financials before. Viva now trading on a PE of 6 and forecast earnings per share growth of around 22% next year. So it certainly satisfies that PEG ratio where you're trying to buy a company whose PE is less than its earnings per share growth. So it's certainly doing that well. It's around a 5 or a 6% forecast dividend for next year. David quite rightly points out margins are looking great. And from a retail point of view, you're at the service station, you've got the munchies. What are you going to say no to that alluring Kit Kat that's in front of you as you're paying for your fuel? So no, it's a buy.
And pay about $10 for that Kit Kat. I mean,
Correct.
we all get sucked into it, don't we? And I'm like, I won't buy anything. It's very hard not to, so I agree. So we've got a double buy there for Viva Energy today from both David and Andrew.